Right, time for some business news now. My colleague Tumisang Ndlovu sat down with Reserve Bank Governor Lesetja Kganyago to unpack the 2025 economic year and the country's monetary policy path. Let's have a look.
On the business desk today, we focus on the South African Reserve Bank maintaining that it will continue to monitor local and global economic shifts as a guide around its monetary policy path. Now, the central bank recently published the latest financial conditions index, which shows an ease in the domestic market. The index also reveals that the country's credit to GDP gap has turned marginally positive. That's despite heightened geopolitical and trade tensions. Sub-Governor Lesetja Kganyago joins us now for a wider conversation on these dynamics. It's a pleasure to have you, first of all. It's not every day that we sit with the governor of the Reserve Bank, and what many South Africans would definitely want to know is the year that was 2025. South Africa, how have we fared in terms of the economic shifts that we've seen and the dynamics around global economics?
Well, the year was full of uncertainties globally. You had economic uncertainty, you had trade uncertainty, you had geopolitical uncertainty. And this made forecasting and analysis in 2025 to be quite a bit of a challenge. Nevertheless, South Africa has fared well during the course of the year. We have revised our growth outlook upwards. We think that we will grow by 1.3% this year. But you also had lots of positive things going for South Africa. We came off the grey listing. The Treasury had reported that we are on course to stabilize the debt this year, and that from the following year, the debt would actually be declining. We have got a new inflation target that had been announced by the minister, and that had created an environment where government's borrowing costs have come down, and when government borrowing costs come down, the cost of borrowing also come down for all the other players in the economy. So, difficult year, full of uncertainty, but South Africa managed to come through well, and that we saw also being recognized by the rating agencies, with Standard & Poor's upgrading South Africa's credit rating and also maintaining a positive outlook.
It's the positivity that bodes well for confidence on the business and consumer side, and I'd like us to dive deeper into the inflation targeting matrix. You alluded earlier to how of that is good for what is termed as debt, borrowing costs and the like, but for an ordinary South African, how does that translate into everyday living?
Inflation is the rate at which prices in the economy change, and that matters. And if you are a consumer, you say to yourself that at the moment, in the past, the Reserve Bank was targeting an inflation target range of 3 to 6%. At 6% inflation, if sustained, prices will double in this economy every 12 years. But if you are targeting a lower inflation of 3%, prices only double every 24 years. So that tells the picture. Lower inflation means that the South African Reserve Bank has got the room to adjust its policy rate lower, which means that it makes the cost of borrowing in the economy lower. So put simply, having low inflation leads us to have lower interest rates, and that is in essence what it means.
What does that do for buying power, which is also a good element in terms of stoking the confidence that is needed within not only the retail space, but generating money in the South African economy?
Remember that our mandate as the South African Reserve Bank is to protect that buying power. So it's a very important point that you are raising, is to protect the buying power of the income of South Africans. And what you had seen is that with the decline in inflation, disposable income is actually released, and as such, people have got more buying power. The maintenance of inflation at low levels had provided for the Reserve Bank to relax monetary policy, lower borrowing costs in the economy, and that has actually released income for South Africans. Certainly, yes, it releases the income for those with debt. Save us, it will be a different ball game, but we are so much a nation of borrowers.
Governor, the inflation targeting, now that there is consensus and it was announced in the medium-term budget policy statement that this is the status quo at 3%. To what extent are we likely to see the changes and the positivity that you speak of inflation targeting at a lower level feeding into the everyday economics?
Well, we began to see that with government's borrowing costs, as I had alluded earlier. But what is even more important is that South Africa will be a low inflation economy. And if South Africa is a low inflation economy, that means that the decisions in the decision-making process of investors, of workers, and of households, inflation no longer features as something that would surprise them in the decision-making process. So it is important not just to have low inflation, but that you have got stability at those low levels.
Having said that, the inflation forecast then, we are ending 2025, going into a brand new year with a bit of confidence and sentiment that bodes well for that buying power that you speak of. But at the same time, with the global economic dynamics, does the South African Reserve Bank's forecasting where inflation is concerned remain prudent?
Well, we expect that inflation will continue to have a 3% handle, and that by 2027 it will be almost exactly 3%, give or take maybe 3.1. That is what we see in that environment. And as I had talked about the uncertainty, one of the things we did in this previous meeting of the Monetary Policy Committee was to present scenarios, to almost like stress test and see if it was to be that the current weakness of the dollar is reversed. In other words, if the dollar was to strengthen against all the other currencies around the world, what would happen to South Africa's economic outlook? It became a very interesting scenario because that scenario then showed that whilst inflation might go up, it remains contained and it will still be having a 3% handle, and that we will still be able, over a period of 2 years, come back to the 3%. And the interesting other aspect of that scenario is that with a weaker dollar, actually growth in South Africa rises, and it rises as a result of a boost to the export, because it makes our exports look cheaper. So the uncertainty had made many central banks to start incorporating scenario planning into their monetary policy frameworks. And we now also do it routinely. At every MPC meeting, we will say, what if, play a scenario and say, if that scenario was to play itself out, how will policy evolve? How would growth evolve? How would the inflation outlook evolve?
Speaking of scenario planning, you did this at not the previous MPC outcomes that you delivered to the country, but the first time that you mentioned inflation targeting being on the horizon. That, in a way, created a little bit of debate. The politics behind reaching consensus, and with MTBPS finally, then there was an announcement that this dispensation has been agreed upon. Talk to us about having to navigate and maneuver with National Treasury to reaching this final stage of consensus.
Fortunately, one doesn't have to maneuver with the National Treasury. We have got structures between the Treasury and the bank that advise the minister and myself. And so one of the most important committees is the Macro Standing Committee. And that committee had been working over the past 3 years, because the conversation about lowering the target started in earnest in 2021 after the Treasury had commissioned a macroeconomic review. That macroeconomic review came to with a recommendation that we should actually be lowering the target and be having a point target. And the teams have been working really hard. And at the beginning of this year, they were really under pressure because the minister and I wanted the outcomes. They had to finalize the work. And the work came to fruition, and eventually the minister and I agreed on the lowering of the target, which the minister announced at the MTBPS being a target of 3%.
So there was no dispute whatsoever on the inflation targeting element of what you are explaining in terms of the work that SARB as well as National Treasury has had to do to arrive here.
By its very nature, policy making is a contestation. And it's because with all policies, there will always be trade-offs. And the trade-offs could be about who are the winners, who are the losers. They could also be on should this thing be done now or be done later. And in making the policy, you also have to then consider the intergenerational effect. And so that is the nature of policy making. And even with the adoption of the target, we did this work and said that in the short term, there will be some costs. There will be some costs to output, but that will be in the first year. And then in the outer 2 years, actually we show that output accelerates, the rent strengthens, the inflation declines towards target, and that with all of those, what you then have is a more stable macroeconomic environment.
Is that bitter pill with the cost that will be incurred in the near term with this inflation targeting regime going to be detrimental, or is it a planning scenario where South Africans have to accept and take it now, especially because there's been criticism about whether the timing is correct?
Oh, no, the timing is absolutely correct. Economists call this opportunistic disinflation. Because inflation was already at 3%, it made sense to say, okay, let us keep it where it is and lock in the gain. So when you put policy on the table, you weigh what are the costs and what are the benefits. Net, the benefits must outweigh the costs. And if the benefits outweigh the costs, you go ahead with policy. Let's start with the fiscus. So our calculations show that the fiscus could potentially save about 900 billion rands over a period of 10 years. 900 billion rands, that's a significant amount of money. But households will also have massive benefits because a lower inflation environment means lower interest rate environment. And that lower interest rate environment fits itself into households' balance sheets, into household expenditure, into household investment decisions, and so forth. So those are the benefits that we all see. And I said to you that there are short-term costs, and the short-term cost could be to output. And we had quantified that. We found the cost to be minimal compared to the benefits, and that this is what we should actually live with.
The benefit that many South Africans appreciated in the last MPC outcomes of this year is a 25 basis point cut in the interest rate. Could it have been more?
You are aware that we have been cutting rates from last year. So when I hear people say, oh, could it have been more? Let's look at the cumulative effect. And the cumulative effect is what actually matters here. We also presented an outlook, and actually our projection, our quarterly projection model has got a guide in there that potentially there could be other interest rate cuts over the next 2 years. And but it is just a guide. We consider data meeting by meeting, and we make that decision. And yeah, South Africans appreciate that they are going to be borrowing less. There is another group of South Africans, is the pensioners.
Yes.
They write me letters and they tell me, one sobbing letter said to me, one day you will also be without teeth and you will know what it means to live on soup alone. So that is the difficult balancing act that the central bank always faces.
I like that you reference the letters that you get, particularly from pensioners. But for some time, Governor, you'd know that some South Africans, when they hear your voice or see you on television, they thought of the worst. But that has shifted. And of course, with the positive sentiment that we are seeing in South Africa, the hosting of the G20 summit and a very successful B20 prior to the G20, what's to be said about the near-term outlook for South Africa, growth as well as that confidence that I allude to?
Well, we're seeing growth accelerating over the next 2 years, moving closer to 2%. And if we continue with the prudent fiscal policy that we had seen, and monetary policy stays the course and keeps inflation low and stable, and we see that the structural reform that government has embarked on beginning to yield results, yes, you will see growth accelerating further. And we have seen this structural reform with in concrete results. Load shedding ended in March last year. It's no longer part of our lexicon now, because that is behind us. I'd seen the report that says that the backlog at the ports had been cleared and the ports are functioning effectively, and that the next stage had to do with rail, and there had been announcement in bringing private sector participation in the rails and in the ports. So we've got to sustain that momentum, and even more importantly is that the report of Standard & Poor's said, actually, we think that you could get an upgrade in the next 12 to 18 months if you stay the course and you do not have a reversal in the program that we have done. And for us as South Africans, I look at this and I said that the things that Standard & Poor's mentioned about, they are about 5. The things that if done, we would be able to get an upgrade. And I said that, wow, you know what? We were put on the grey listing. We had 22 action items to sort out. We were able to sort them out in 24 months and we got off the grey listing. And so if we continue with our reform momentum and we maintain the prudent policies that we have so far, we will see those benefits actually coming through.
That's the positive side. And as we wrap up, there are also negatives that pose risks to how South Africa is viewed by even rating agencies, but the global economy as well, corruption being one of them. How fast can we deal with that, especially as you referenced the work that was put in by South Africa to get off that grey list?
Well, our contribution as the central bank had to do with the financial system. And one of our mandates is to look at financial integrity, to prevent abuse of the financial system by criminal activity. And so you would have seen in those 22 action items, there were particular aspects that the financial regulators had to deal with. We addressed all of those. And I think that what is important is that, again, we stay the course. We have been able to address those things. We must make sure that we do not have a reversal. Next year, we will be having a mutual evaluation, again, by the Financial Action Task Force. Fortunately, for government has put the same team that managed to take us off the grey list to engage with that process. And that is what we have got to be putting our focus on.
Thank you so much once again, Governor, for giving us your time. Like I said, it's not every day that we get to sit down with you.
It's only a pleasure.
That's how we wrap it up on the business desk with the Reserve Bank Governor Lesetja Kganyago talking to us about the year that was 2025 on the economic near-term outlook as well as monetary policy.